Hi, the budget was announced yesterday. As usual, there is lot to hear and read, lots of news, views and analysis. We will attempt to reduce the clutter of information and focus on the announcements related to personal finance. Firstly, let us look at taxation. There is no change in the personal income tax slabs, cess or surcharges. If you earn gains on ULIP investments, wherein the annual premium is greater than 2.5 lakhs, they will be taxable at maturity. This is only for ULIPs issued on or after 1st Feb 2021. Provident fund interest above 2.5 lakhs per annum will also be taxed. Unfortunately, there is not much incentive to put money in it above this limit. The advanced tax liability on dividend income will arise only after declaration payment of the dividend by the company, as it is difficult for retail investors to compute the amount. Now we go to taxation processes. People who are above 75 years old are exempt from ITR filing if they have only pension and or interest income. Earlier, your IT returns could be reopened up to 6 years in the future. But from now on, a settled assessment can be reopened only for 3 years unless there has been a serious offense, in which case an assessment can be reopened up to 10 years. Pre-filled details like dividend income, capital gains, bank interest will be available in the IT forms. Hopefully, this is easier for you to complete your returns. NRIs may get some relief. The rules related to taxation of income arising on foreign retirement benefit accounts will be realigned, and it will be easier for NRIs to get credit for taxes paid abroad. There are some announcements on investments. The government plans to allow infrastructure debt funds to raise money by issuing tax-efficient zero-coupon bonds, in which retailers can invest. Earlier, claims on deposit insurance could be made only after the bank's license was cancelled and the liquidation proceedings had started. This resulted in delays and non-payment of claims. The government plans to change this such that the bank customers get access to the bank deposit insurance up to the extent of 5 lakhs when the accounts get frozen and before the bank goes for liquidation. An additional deduction of 1.5 lakhs on home loan interest on affordable housing was introduced a couple of years back. This facility is extended till March 2022. Finally, an investment charter will be set up for all financial products to curb mis-selling and to protect the interests of investors. Some other announcements were made. If the employer delays in depositing the TDS deducted from salaries paid to employees, the salary expenses will not be eligible for tax deduction. This can result in a huge cash outflow. Due to COVID-19, many people lost their day jobs and are working in different conditions. Therefore, Social Security benefits will be extended to gig and platform workers. E-commerce workers will now be brought under the Employee State Insurance Scheme, Employees Provident Fund, and the minimum wage rule. Hope this is helpful. You can always contact us to find out how you need to tweak your finances based on these announcements. Do check out our other videos on personal finance. Thank you.